Hi, everybody. We're going to get started here. So if you could wrap up your conversations and find a seat. While you're doing that, I would like to introduce myself. My name is Jordan Marinkovich. I am the platform manager for Innovation Works, and I help support all of our portfolio companies in our program. Tonight, I'd like to thank you for coming to our event, Outside In, where we bring an investor from outside our region to learn more about Pittsburgh and share some of the exciting technology that we have going on, especially in this building, which is the Robotics Factory, one of our 4 accelerators with Innovation Works. If you're not familiar with Innovation Works, we are an early stage investor. We also have 4 accelerator programs for the sectors of software, hardware, robotics, and life sciences. I am going to kick this off my colleague Peter this evening, who will be introducing Landon. Thanks, Peter.
Thanks, Jordan, and thank you all for coming out. We're really excited to have a great conversation with Landon about technology, what he's up to at Drive Capital, and what he thinks about the Pittsburgh ecosystem. And so, thank you all. Please come. We got seats in the front. Grab a drink and let's get ready to go. So without further ado, I'd like to introduce my guest, Landon Campbell. Landon is the general manager of Drive Capital in Chicago. And it's very nice of you to come here to Pittsburgh today. So
of course, thanks for having me. I just want to say thank you so much to the Innovation Works team. Peter, you guys have been amazing. I feel like I've been welcomed with open arms to Pittsburgh. Might end up moving here. So thank you so much.
Well, awesome. Let's get things started. So Landon, you've had like an interesting entry into venture. And so I'd love to dig into that. Like you started a podcast, which was called In Their 20s. It focused on interviewing leaders like Steve Wozniak from Apple, Ev Williams from Twitter, focused on sharing their insights and what they learned in their 20s. And so I'd love to hear about like your story and like what you've learned in your 20s.
Of course. Yeah. I think one of the biggest pieces of advice that I tell founders that I work with often is action produces information. You need to just constantly be in motion, constantly keep swimming, because the second you stop and halt and pause, you start to lose momentum. So before I even started the podcast and media company, that even started as something completely different. TLDR on that one, I launched my senior year of college a streetwear marketplace where we were looking to connect local streetwear designers in Chicago through a subscription box like service with consumers, and started to really dive into that, meeting with a lot of different designers in Chicago, interviewing them, running, your sort of average ICP interviews as one does. And then COVID happened. So the world was ending and felt like, we didn't really have an opportunity at the time to continue the idea. And I remember the first few days of COVID, we thought we were going to be back and operational in 10 days, and 10 days turned into a month, few months, so on and so on. And it was frustrating, but, at the same time, my co-founder and I, we were just so energized by a lot of the conversations we were having with designers. We were like, we should sort of waste some time and just start interviewing other business leaders, folks that we could probably turn into connections in the future, potential investors, but also like just kind of, get their advice. Like this was a time where a lot of my peers were losing their post-grad jobs. A lot of people felt like they had no direction on what the hell was going on in life. And, a scary time. So we ended up starting the In Their 20s podcast, where we were interviewing successful business leaders about what they did in their 20s, back when they did not have anything figured out, to really distill advice from them and share, with our peers and colleagues and ourselves. And it was great. We started locally with that, but quickly expanded, over 110 episodes, interviewed folks like Steve Wozniak about the OG days starting Apple with Steve Jobs. Ev Williams, a co-founder of Twitter. I mean, that was crazy because Twitter, fun fact, started as a side project, a little hackathon project. That wasn't even the main sort of platform that they were looking to build. It was a podcasting platform called Odeo. Tim Draper joined the podcast. David Sachs, one of the first COO of PayPal and early employee of PayPal. Jason Calacanis, one of the first investors in Uber, whom I ended up going to work for. So all that to say, I think it is just so important to constantly be taking in insights, moving, staying in motion, especially just with the fast pace of technology and where the world's going. You gotta keep moving.
Yeah, absolutely. Yeah, that's a great pivot you pulled off, and a lot of our companies here similarly had to pivot during COVID. And yes, so let's pivot to talking about Drive Capital.
Yeah.
So Drive Capital was founded with the bold mission that that the Midwest, particularly the Heartland, was a fertile ground for innovation. And over the last decade, the rest of the world has caught up, and this is not an uncommon thesis.
Totally.
So like what about the Heartland gets you excited today?
Yeah, so just the sort of background on Drive. Drive was started a little over a decade ago. And to your point, Peter, I'd say we were the first crazy firm to say that, yeah, you don't have to be in Silicon Valley to build a great business, a large business. You can be anywhere. You could be in Pittsburgh, you can be in Chicago, Columbus, but firms between the coasts, or I should say on the coast, coastal firms, just blatantly ignored. And that was the case 10 years ago. And still, it might be the case today with a few firms. They're just ignoring the large opportunities that exist between the coasts. So, we had two of our founders at Drive were general partners at Sequoia Capital, and they saw this. I mean, in their partner meetings, if anything was outside of a bicycle ride from Silicon Valley, they would just ignore it. And it really frustrated one of our partners and one of our founders, where he found a company in a city called Petaluma in California, maybe like a 35-minute, drive with traffic at most, but they refused to look at it. Because again, the partners there would always say, you got to be here. And mainly it was because of like the infrastructure piece, the physical servers were there. It made sense. But then AWS, did something really cool and allowed you to sort of, with the swipe of a credit card, access cloud and, sort of compute there. So that was the big shift. So that's what really woke up our founders. So they took the bold idea to launch Drive in Columbus, Ohio. Again, started around 2012. We were the largest first-time fund in history. We raised $250 for our first fund, investing Series A and Series A companies in Columbus, where we're based, Chicago, and Pittsburgh, fun fact. And now we are a full platform, investing pre-seed to pre-IPO. We're the largest venture capital firm between the coast. We have $2.5 billion under management. And I still think that all of the trends that they saw originally still stand true today. You have, one of the highest concentrations of engineering grads graduating from our region. If you name me any top company, right now that's been built in the U.S., but there's a high probability that one of their early hires, or maybe even the founder, graduated from a Midwest university, a university in the heartland. And I really do think engineers here are just different. They like to get their hands dirty, which is why you have some great companies that have been built. So with the talent side, I mean, that is still going to be true. And then with the actual, customer side, we really do think you should build where you're strongest, like build where you can go outside and knock on a door and get in front of one of your customers. And that is the case in the Midwest. In Chicago, where I'm based at least, we have the second highest number of Fortune 500s. We have a very wide array and different diversity of enterprise customers. Those are all companies that you can build relationships with and start to sell to. So that's very important. And yeah, we still think that this region is just ripe for innovation, and investment specifically. Because time and time again, we were just losing great founders to the coasts, which just always confused us, because you have sort of, we call it the driveway. It's the sort of region between the Rockies and the Hudson River. You have this region that, if it were its own country, it'd be like, on a GDP basis, it'd be like the third largest country in the world. But it's this large economy that only gets a fraction of venture dollars versus this California as a whole, not just Silicon Valley, but California as a whole is like a $2 trillion GDP, maybe 80% plus of VC. So we're trying to really, continue to put this region on the map, invest, put our dollars where our mouths are, and, push it forward.
Yeah, that's so awesome. And so much of that resonates and is directly aligned with our mission here at Innovation Works and how we're doubling down on supporting the local manufacturing community with the robotics factory. A few of the initiatives we're doing here are, the Robotics Factory Accelerator is an accelerator focused on robotics companies. And then we also work closely with the local manufacturing industry, helping reskill job candidates to work in manufacturing.
And all of that space is here. I mean, where I'm from in Chicago, we have like I think, highest number of manufacturing space. And when you look at the reshoring and onshoring that's going to be happening and continuing to occur, a lot of this innovation is going to be happening here in this region. So I think people are starting to realize it a little bit more now, and which is why I'm very excited to double down on the Midwest.
Yeah. That's super exciting. And if we could talk about like Pittsburgh in particular, because Drive's invested in both Duolingo and Gecko Robotics, like two local Pittsburgh companies. And I'd love to get your perspective on like what makes Pittsburgh unique, because you have this view of like the whole middle America, the whole country, Columbus. Like, how does Pittsburgh compare to Chicago, Columbus?
Yeah, I mentioned earlier that Midwest founders like to get their hands dirty. I think that's very, very true in an ecosystem like Pittsburgh. I've spent a lot of time visiting Carnegie Mellon, and I believe this is probably my 8th or 9th trip to Pittsburgh, and I'm excited to build further relationships here. But just seeing this sort of robotics and AI, computer vision talent that I've seen come from that ecosystem, and a lot of the founders I've met with. I mean, I just learned a few months ago, as in preparation for this trip, about all the great work that you guys are doing here. I think you guys are really focused on sort of building your brand in that vertical and continuing to see it sort of built there in robotics and automation, areas that we care deeply about and are very important, for the sort of future of our country.
Absolutely. Yeah, we're really excited about the opportunities that we're seeing across the robotics landscape, as well as healthcare. I think, Pittsburgh with local health systems, UPMC and Highmark Health, really seeing a lot of great healthcare innovation coming out of there, both on like the drug development side, as well as healthcare services, digital health. So it'll be exciting to watch that develop.
And I do think like we need to find opportunities to collaborate as a region a little bit more, individual cities. And like I'm trying to build stronger ties with folks in Pittsburgh. I do the same. And, when I visit different cities in Michigan, and, we've built a lot of brand recognition, obviously in Ohio where we're based, but, in thinking about all those stats of like, how we can compare and like, be closer to, the amount of venture capital allocated and just companies that come out of a region compared to the Bay, I do think we'll be stronger together. So we need to find better ways to sort of mend our cities together.
Yeah, absolutely. And that gets me thinking about fundraising and like how, because our accelerator companies largely come through, and then during the accelerator, they're like working on product market fit, right? Trying to get their first customers. And at the end of it, we're advising them on their fundraising strategy. Like, how are they going to build relationships with investors? And, given that, we've got a slew of local venture capitalists, but like they're oftentimes having to get outside of Pittsburgh. So, and like, it's a big part of my role, trying to like connect them with investors like you. But like, what strategies have you seen from like your successful founders on like at the pre-seed level?
Yeah, a lot of great advice here. So it might be all over the place. Apologies. But I do think, first off, like mastering the art of the cold email, it can be very important. I think it's always great if you can be introduced, by a warm lead or someone that a mutual connection is great, but you will end up having to send a lot of cold emails to investors because it is a numbers game. You can't sort of just take 5 conversations and think that 100%, one of them is going to click. And also you're going to get a lot of no's, but rejection is just redirection. So, and also a no today doesn't always mean a no tomorrow. So it's a numbers game. I do think it's a qualified numbers game. Like you should be building lists, little mini CRMs of 100+ venture firms. And, you really starts with a cold email. I think it even starts in the subject line, being very clear about why you're reaching out. And you don't want to spend too much time really diving into every venture firm before you meet with them. But I do think, there's a lot of just information that we post, we're tweeting about these different areas that we're investing in. You can see our portfolio, on our websites. I can tell, a founder that's just reaching out cold, that has no idea what Drive is, what we do, and they're building something that's directly competitive with one of our companies. Versus if you were to point that out in the conversation, like, hey, you might think that like this is competitive with one of your companies, but it's not for XYZ reason. And they're like, that really stands out. So I think that's great. Number 2, I'd say you got to run your own sort of diligence as well. We always talk about like, we run founder due diligence. Like you guys can run investor due diligence. Like it's if you're deeper in a conversation with an investor, like you can reach out. You should be encouraged to reach out to like, founders that we work with. Really take your time on that decision, because this isn't just like a marriage. What a very famous investor says, you can get a divorce in a marriage. This is like having a kid with someone. You can't just get rid of your kid. This is a 10-year relationship. Plus, sometimes you want to make sure that you are working and partnering with the right person. So that's very, very important to run your proper process there. I do think also, there's this idea of like, reverse jujitsu that you can sort of run while speaking with an investor. You can ask up front, and the first conversation is only 30 minutes, so it goes by quick. You got to, really be productive with that time. But I think you could totally ask like, hey, outline your process to me. Like, like how many meetings am I going to have? And even a layer deeper, like what are you going to need to get this over the line? Because after I meet with you, if you're able to inspire me and like it makes sense thematically, for our firm, like I'm going to bring this back to my team for something called investment committee, IC. And I usually, it depends, but have to present that company, write my own memo. So if you could sort of save the time and sort of ask like, hey, like, what is this an area that you're investing in? And like, if this is an industry, like what types of companies are you looking for? Like metric wise, like ask all the questions. You can, it's all sales, really. So I think that's sort of the reverse jiu-jitsu that you can run. And if you get all of that, the sort of important metrics, then you know exactly where to strike. We're playing our cards for you. So I think that's very important. And yeah, I'd say other advice, like put yourself in our shoes as well. So just to kind of give you a day in the life, I can sometimes meet with like 8 to 10 companies, in a day. And I love it. I love what I do. Every conversation is like a little mini TED talk. But maybe like the first or second conversation, let's say I'm having that with you. It's like a 8:30 a.m. call, 9 a.m. call. Assume that I'm going to be meeting with other teams after, and assume that I'm going to be forgetting, moments or like, important sort of nuggets, from that initial conversation. And at the end of the day, that's when I'm, trying to write my memos and, sort of present things. So, I mean, when you follow up, it's also mastering the art of the follow-up. When you follow up, still keep it short and simple. But like, if you notice like my eyebrow sort of raised during that initial conversation, when you mentioned like that one very important thing, like that's what I would sort of, lead into and say, hey, this got you excited during the conversation. So it is really like, running just a sales process, keeping people excited, and, getting to an answer quickly as well. Because the worst thing that we can do, and I make mistakes, still, I'm not perfect, but a long drawn out no is very worse than a quick no or yes. So I think for your benefit, like you guys need to get answers quickly so you can move on. But I'd say those are like sort of the 4 main things I'll say. But as for what we want to see and what we look for, and I'll actually even tie this to another piece of good advice. The 5th sort of point, actually, before I get to the point, every venture firm is sort of made differently. Like there are no 2 venture firms that are the same, meaning you need to do 2 things. You need to understand like just simple venture math, and also understand like that sort of dynamic, the fund dynamics for that firm. And what I mean by that is that, we're a $2.5 billion venture firm. So think about like what types of companies and what types of outcomes specifically we need to see to like really get us excited. We are looking for the companies that will become multi-billion-dollar companies. The ones that will allow us, and we're very capitalistic how we think. We try and be very transparent about that. We think every firm should, but that might not be the same as like a smaller. But not to say we're, it's just different sort of threshold, but that might be very different than a smaller, maybe $2 to $5 million firm. Like they need a different type of outcome to be considered successful. So all that to say, like, yeah, be intentional with the firms that you're reaching out to, and know that, if you could sort of break down that in your story, like this is what the outcome could look like, and this is how large the opportunity is. This is how large the market size is. I think that's all super important to really get break down. But I'll let you go so I don't talk too long. But those are like the 5 big points, I'd say.
No, yeah, I love those points. And yeah, just so everybody has them, I'm going to recap them.
Yeah, I forgot it.
Let's see if I got like the importance of a
cold email.
well-crafted cold email. B, follow up, or 2,
Yes.
follow up. 3, like highlight the details that got you excited. Focus there. and 4 venture math, and I think I
Yep.
forgot one there, but
Yeah, venture math and understanding our perspective. Yeah,
awesome.
and running your own process, your diligence process.
Yes, awesome. Thanks. Those are,
I'll put this in a book and then make it a little easier to get across.
or maybe a podcast, TikTok.
But I mean, the industry is just so nuanced, and again, there's no one way to sort of meet with just every firm and to run a full process. So I'd say it's really a numbers game, but also like you gotta curate the conversations when you can.
Awesome. And then sticking to how you evaluate companies. So at the pre-seed level, like the founder is often the only thing that you're betting on. Like you're looking at the market, you're looking at traction, but like the founders, the majority. Can you tell us any things, like characteristics about founders that get you excited?
Yeah, totally. I mean, we love founders that are highly technical, founders that can build everything that they're talking about. So, their capabilities to do so are in-house. It's them, maybe like the ones that are building that, whether it be, service, product, platform, whatever it is. We love storytellers as well. I do think folks that can package everything else that I said previously, folks that can really break down the market size clearly, explain why this needs to be built today. Like this is the opportunity that we are going off of. This is the major catalyst that just happened, the sort of behavioral shift or macro level trend. And you just can tell a founder that has been perfecting their story. Like, they could tell the same story to a 5-year-old, 95-year-old. Everybody's going to understand it. So I think that's very important. And also, it has to be thematic with what we're looking at and what we focus on. I think you have like 3 types of venture firms in the world. You have specialist firms that will only touch like one industry, and they do that well. And that's the background of the managing partner or GP, and that's all they do. You have generalists, folks that will sort of maybe a little bit more opportunistic. They'll touch anything. And then you have thematic, I'd say like right in the middle. That's where we sit. So we have a process every 3 months. We're picking up new themes to look at. We are meeting with like 300 to 500 companies in that theme to really understand the landscape. These themes are like catalytic moments that we see in the space. And we really are trying to uncover like the gaps that exist, the opportunities. And then we try and find the founders that fit within that, the founders that, are thinking about the industry differently. And I'd say the last thing that I, always love to see, founders that have something called measured madness. Like, yes, we want the big visionary founders, the ones that want to take over the world, but it really happens brick by brick and sort of day by day. The founders that can really articulate, this is the beachhead we're going after. This is how we're going to make our mark. These are the plans for today, and we're going to iterate until we figure it out. So all of that to say, founders that are wildly ambitious, technical, can move quick and try things.
That's awesome. Great insights there. And I'd love to double click on the themes. Like you mentioned that Drive, you guys have certain themes, sectors, technologies that you guys are investing in. And that's really interesting that it change every 3 months. So I'd love to hear like what you guys are looking at now.
Yeah, we have like a healthcare services powered by AI, which we're sort of calling like the healthcare supply chain. I've done a lot of our work in music and the creator economy. We'll continue to look at robotics, and specifically we call it automation. And so we have a company called Thoughtful Automation, for example. They are building tools for healthcare professionals, specifically administrative tasks tied to revenue management. We just did a Series A for them, and so that's an area that we're really excited about. And then another one is like Path Robotics, where they're building an automated welding platform and company. But it is really just off the shelf, like welding supplies, and it's the software platform that's sort of the innovation that they're working on and building. So that's a company that we're excited about. But I'd say it's a wide array. Like we'll do future of work. That's an area that we've looked at for a while. But overall, I'd say just we are so fascinated by large language models, and like every firm, you guys have probably heard it a million times. But and we'll get to a day where we don't have to say like, is this an AI platform, or are you leveraging LLMs? It'll just be sort of what you're doing. But we do feel like this is a transformational shift that every company in one way or another should be talking about. And it's a clear sort of why now. It's a platform shift. So yeah, we're investing heavily into like different AI applications and infrastructure.
That's awesome. I'm glad you brought up thoughtful AI because it's just their tagline is super inspiring to me as an investor as well. Because their tagline is hire your first fully human capable AI agent. So like, really thinking about just replacing employees with AI and yeah,
And
that's
making employees more productive too.
Yeah, thank you.
But I'd say, yeah, Thoughtful is an interesting case study because when they started, like they didn't start in health. They were building pretty horizontal. I mean, because the automating RCM is really sort of the task of doing so, like and the agent required to do so, could be done in a lot of different industries, whether it be manufacturing and supply chain. But they started to get some really good momentum in healthcare and just really delve deep into that. So they're going vertical in healthcare today, but in the future, the vision is that they can, do what they're doing, apply it to other industries. So I think there's a really good learning there, where they just kept swimming. I keep referring back to that, like they just kept moving, kept trying new things, and then saw that there was a big opportunity in healthcare. And we're very methodical about cutting off all business and other industries so they could focus on this. Because if you think about it, like every new customer that they bring on, sort of now in this one industry informs how they work with the next one, and they can continue to build and strengthen their model. So specifically in health. So I think that's a pretty cool call out.
Yeah, it's super interesting. Thanks for sharing about how the story of how they refine their focus is super relevant. It'd be great to go down memory lane and dig into Drive. You guys invest from idea to IPO, and you've had some big successes with Root Insurance and Forge Biologics. Could you tell us about those?
Yeah, so we've been incubating since day one, but a lot of the incubation happened and just was only subject to Columbus, Ohio, because we were physically there. And when you want to incubate, you got to have someone in your office. You got to work closely with them. So those were two examples where Root, because we were so thematic, and we saw a gap in the insurance industry, like we should incubate this company. So we found a team, to build that, and they're now a publicly traded company, and they're doing great. And then you got Forge Biologics. So similarly, our partner Molly was running through, cell and gene therapy and life sciences, biotech, and she saw an opportunity to build a CDMO. So we found a Rondi and a few other folks to build that, and they just exited in Q4 of last year. We were like 9 or 10% of all VC exits in Q4 of last year, which was pretty cool. Just from this one company. It happened after 4 years too, so they crushed it. And now Arandi, the founder of Forge, ended up joining Drive as one of our partners. So she's leading, talking about the full life cycle. She's leading now all biotech and life science companies in investments that we make from Drive. But going back to something I mentioned earlier, the plan now is to sort of expand the pre-seed focus in different cities, but we have to physically be there. So I joined Drive in 2022 to build out the Chicago pre-seed presence and fund. And we're doing the same thing right now in Toronto, in Austin, in Atlanta, and in Boulder, Denver, and Columbus. So we have about 6 cities where we're investing, idea on napkin, looking at research papers, constantly seeing what we can incubate, doing their initial $500,000 investment, and trying to help them build the foundation of what they're doing.
That's awesome. And I just have one more question, then I'll open it up to the audience. So, I mean, it's regarding how you build your brand, how you compete with other VCs. I mean, obviously, having a significant number of the exits, as you mentioned, that's going to help. But what practices do you do to add value to portfolio companies and build your brand?
Yeah, in different ways. So I'd say I really understand at least the city of Chicago, where all the resources are, different service providers, introductions to customers. So, I think the tagline for what I do is really help companies break ground in Chicago and in the broader Midwest. And sort of I have a constant feedback loop for that too, because I have a weekly newsletter I release. I believe we have the 80th edition coming out on Monday, but it's specifically insights about Chicago and the Midwest. So I will be writing about all the great wonders of Pittsburgh next week. But that sort of allows me to continue to build the brand and network with everything we're doing. But yeah, it's at Drive as a whole, we have a talent agency internally. So we're actually helping our companies find key hires. And we understand how quickly startups need to move. So they are on their game. Like they move very fast. We understand the importance of urgency. So I'd say that those two added on to just being thematic means that we really understand these spaces. And that helps with additional intros, that helps with strategy sessions, and really helps move the needle for our companies. Like we speak the language of our companies, of these industries they're building in.
That's awesome. Yeah, I think Innovation Works, we also try to follow that model of having deep industry expertise. We have expertise across robotics, healthcare, software, and yeah, it's been really great chatting with you and learning from you. So I'll open it up to any questions from the audience for Landon.
Peter, I'm actually just going to steal it away from you for a second. I'll be passing around the mic if you have questions. So if you raise your hand, just wait till I arrive with the mic for you to ask it. And before moving the Q&A, I just want to take a moment to thank our sponsors who make events like this possible. We thank you to Buchanan, Ferris Properties, and Sisterson. Thank you.
Thanks, Ray.
Thank you. All right, now back on to the question. Brad, I saw your hand go up first.
Thanks, Landon. I really appreciated the thoughts on the thematic investing, so you can kind of stay on top of what's relevant without spreading yourself too thin. So I was curious about the typical tenure of one of your themes. Are you changing everything out every 3 months, or do you keep something for quarters to years, depending on relevancy?
Yeah, so we have so how do we manage all of this? We have this internal system. It's actually another resource that we can give to our founders too, but it's called Herbie. It's pretty much like our AI analyst. So it actually helps us put together these market maps. It helps surface companies. So all that to say, like we build market maps and themes through Herbie. And I'd say active now. I mean, there are hundreds of themes that we've created since the founding of the company, but I'd say there are probably like 60 themes that just sort of remain active, like they sort of continue with relevancy for a while, at least we've seen in the decade plus of having the firm. But there are a lot that will expire and just kind of put to the bottom of Herbie. But we still, or maybe it's just too early, in that specific space. One that I'm thinking about right now is quantum. So when we started to look at quantum, that was a few years ago. We did the process. We spoke with like a lot of folks and built our own sort of understanding, and these are the key areas that we'd want to invest. But ultimately, just said it was too early. This was a few years ago. But we're starting to see a big kick, in the Midwest, specifically in Chicago, with quantum. Like I think 46 cents of every federal dollar spent on quantum is happening in Chicago. We have like one of the highest concentrations of quantum scientists in the Midwest as a whole. So I assume that might be an area, more than likely will be an area that we'll start to look at again in the future. And now we already have all the work done. It might need some, polishing, but yeah, that's sort of an example of when we can expire a theme.
All right, if you can just put your hands up for a moment. I'm going to start here and then we'll move around the room.
Landon, on your website, you've got a category called Future of Work. What is the definition of that according to Drive?
Yes, yeah. So that's not my theme. That is my partner John's theme, but it can mean a few things. You could be making sort of the current workforce more productive, as we were talking about, with different software and different systems of record there. You could be tapping into more of the gig economy, finding unique ways to help emerging classes of different industries, side industries, increase revenue, build profit for what they're building, manage different their own customers. And then now we're starting to see like this sort of agentic workforce, future of work, where we're seeing companies sort of trim down on OpEx, talent overhead in order to sort of bring on these agents that can fulfill tasks themselves, which is an interesting future that we're heading towards. But I'd say those are like the three different parts that we usually see in future of work.
Hi, thank you. You mentioned, mastering the art of the cold email. I'm curious what your favorite email subject line or something in the email that you really liked.
Yeah, I've seen the crazy ones like which I wouldn't recommend to do, but like, I get a bunch of ones on LinkedIn now where like people will take a piece of paper and like write my name and like just take a selfie of them and send it. I mean, I'm talking about it now, so it stands out. I've had a few folks like send me videos as well, which those are interesting. But I mean, yeah, I don't have specific examples of ones that have worked well. Just the ones that work well are always a mix of short, sweet, simple. And when I say it starts in the subject line, like it really does. Because a lot of these folks are not reading past like the first sentence, if we're being honest. If we're getting like, hundreds of emails a day. So I think it's always relevant to say, just put yourself in their shoes, whoever you're sending it to. If you see you have mutuals on LinkedIn or like you have a relationship with someone they might know, like, put that in there. That can always be helpful to say. But yeah, keep it short, sweet, simple, and stay persistent too. But yeah, I think my Steve Wozniak email only took one, and then got a random reply like 3 weeks later, and I was like, "Holy shit!" So, yeah, you'll surprise yourself if you just keep them short.
Hey, Landon, thank you so much for your time. Super interesting. I'm curious, when you're looking at companies, especially more like the pre-seed level, how do you think about or evaluate what the founders are thinking and doing in the short term, right? They're like first product to market, their MVP, versus what their long-term vision is for the company.
Yeah, you got to do it with a sort of interesting thought in mind, because the company might pivot a lot, and like that's something that you got to consider. So yes, I mean, you really have to sell an investor on that long-term vision, and you have to excite them. But at the same time, like we encourage companies to experiment until you really figure it out. We might have a sort of idea of like how we're going to attack the market, and I love founders who have just already tried to do it too. Like I say I'll do on napkin, I say early, but I still think there are ways to sort of there are things that you should do before approaching an investor and trying to validate that idea. But yeah, you could just again really tell someone who's thought thoroughly about what they're trying to do, how they want to attack the market. And I think just another point of advice for fundraising tied to this: whenever you raise one round, you're essentially raising 2 rounds at the same time. And I don't think enough folks recognize that. Like you're raising one round for like to fulfill the needs of what you need to do in the next 6 to 9 to 12 months, pre-seed to seed. But also one connected to that really sets you up for the subsequent round, because you want to like sort of exceed your mark a little bit. So yeah, use that perspective when speaking with investors. Like, I'm really raising 2 rounds, and this is where I'm at right now. There's most amount of risk. So how can I really get positive momentum, which is going to look different for every company, which is why we don't easily say like you got to have like this amount of revenue and this amount of customers. I'd say us as a firm, like we prioritize, like if you can have a small group of people who are obsessed with your product or platform, like they're using it all the time, every day, like that could be 2 to 5 people. That's actually a little bit more better than someone who has a flimsy thing with thousands of customers, but they're not using it really, poor retention. Because yeah, if it worked very well for that small group, and we've already done the math and identified that there's a larger market here, you can turn that on at any time. We can. Capital can sort of accelerate that.
Awesome. Any last questions for Landon?
Hi, thank you, Landon, for being here today. The AI technology pieces are fascinating, right? They're sexy, they're trendy. I work in the healthcare sector, and so while some automation aspects might be very trendy and attractive, we're kind of on the edge of the generation that came before us that built a lot of what we enjoy today, that baby boom generation. And so I'm kind of curious, a lot of the things you're talking about can often not translate to that generation. So I'm curious what you're seeing in that space that might be of interest.
Yeah, I think our job has gotten interesting now because it's almost like we're looking for needles. A cool idea, and if you add AI to it. So I mean, the simple advice I give here is that it's tied to your point. The fundamentals still matter, when it comes to building a business. Like AI can accelerate, It could help make sense of a lot of unstructured data. It could help you move quicker if you want to use it internally as well. But the fundamentals still matter. Like you need to go after a very acute pain point. You should start small in a massive market. Like start small, go after that small problem, that wedge that really makes sense. And yeah, like don't sort of get away from again, the fundamentals of what's important when it comes to building a business. So I feel like that hasn't changed at all, since day one. So yeah.
All right, a few more questions.
So thank you, Landon. Very interesting, really exciting, especially that you're looking into the heartland. I noticed that in your portfolio, there's one company that is in a acre or something is related to agriculture. Some of us are really focused on agriculture and robotics. Do you have any comments about whether you have looked into that area and any areas that are?
Yeah, so you're referring to Acre Trader.
Yep.
It's not one of my areas, and I haven't spent a whole lot of time there, so I probably wouldn't be the best to answer. But yes, I'd say ag tech, manufacturing, those are all areas that we're sort of looking at. So if you're building something interesting there, we could practice, send over a short, sweet, simple, cold email, and I can get you tagged with the right person at Drive.
Awesome. Well, let's wrap things up, folks, and we still have drinks and food. And thank you so much, Landon. Thank you all of you for coming, and look forward to continuing to invest in the Middle America.
Yeah, thank you. And I'll just say one more thing too. Very transparent about my email. It's just landon@drivecapital.com. Actually, all of our emails are on our website, but because we give our emails out, just expect, not always the fastest responses. We do our best. But also, I mean, yeah, it's all tied to everything I mentioned with the art of the cold email. And also, if you want to just stay up to date with like everything we're doing in Chicago and the Midwest and Columbus and hopefully in the future in Pittsburgh more, you should totally subscribe to my newsletter. It's called Landon in the Loop. It's just Landon's Loop, LANDONSLOOP.com. I was just frustrated by all the pessimism from Midwest media, just talking about this company leaving, and just like, I mean, okay, that's bullshit. Like, let's celebrate the optimism and the exciting things happening in our region. And sort of, we need to market better. If we expect people to move here and relocate and cherish all the amazing things we have here, we need to market better. So I release that newsletter every Monday and take a lot of pride in it.
Awesome. Yeah, I highly recommend that newsletter. And again, Landon,